Hi, everyone. Welcome to our second virtual roundtable out of the three that we're hosting this week. We're really happy that you could be here. I'm Jody Skinesny, and I'm the Vice President of Member Engagement here at the MICPA. Little bit of housekeeping to start off. We have everyone's line muted because we have well over 100 people joining us on the call today, and we're really happy that you could all be here. If you would like to ask a question, please type it into the chat. If you just touch your screen, you'll see the control bar pop up at the bottom. One of the items on there is chat. You can click that and type your message there. I will be reading the chats to Leon as we kind of go through the afternoon or through this hour and a half call. If you have any additional questions during the call, if you don't want to put them out to everybody, you can send them to the MICPA, who is a participant, or you can look for me, and again, my name is Jody, and send them directly. Otherwise, please send your questions just to everyone, and I will read them out loud as we get going. So right now, I want to introduce our featured moderator and speaker today, Mr. Leon Lebrecht. Leon has been featured in media outlets like Forbes.com, Reuters, CNBC, USA Today. He is the Chief Growth Officer at Sequoia Financial Group. He's a practicing attorney, CPA, CFP, and CFA. Additionally, he is a member of the MICPA Board of Directors, and we are so happy to have Leon with us today. I'm going to turn it over to him.
Great. Hey, thanks, Jody. Hey, everybody. Good to see some of you and to be with all of you. What weird times, conversations in the world of COVID-19. So it's an interesting time and an interesting place. I think there's a Chinese curse that says, "May you live in interesting times." I've got some things for us today, and I want to talk about a lot of things. Obviously, we would like to do questions, but I thought I'd give you a brief presentation. I've been neck deep in the CARES Act. Been communicating with Ways and Means, been communicating with members of Congress and Senate. I've been trying to get clarification on a bunch of these things. Just got to contact the MICPA worked with the governor's office. We're working on something we'll be posting hopefully within a day or two with the help of Quicken Loans and the Small Business Association on the PPP program. So I know everybody wants to talk a bit about PPP, and I do too. Just by way of background, I've seen a lot. I've been around a long time, as you can tell by looking at me between my face made for radio. Uh, I am been a CPA since 1978. I've been worked for Arthur Anderson, where I successfully shredded papers on the Consumers Power audit. Then went to Plant Moran. So I've seen a lot. I've seen the '87 crash, and I've seen the recessions of the '70s, and the recessions of the '80s, and the recessions of the '90s, and the recessions of the 2000s. I've never seen this. I think we are facing an interesting health dilemma as this virus vector finally peaks. But I think we're facing an economic situation and a financial situation that I've never seen. And just to put it in perspective, in the last month, we've had a bull market and a bear market. We've had a 20% drop in the stock market and a 20% rise in the stock market, and it's going all over the place. We've had oil go down to 20 bucks a barrel. In 1 week, actually in 9 days ago, since 9 days, the unemployment law has changed in the state of Michigan, in the government, in the country. The SBA law has changed. The Tax Cuts and Jobs Act changed. The tax laws changed. Retirement laws changed. And the Fed threw a new bazooka at this financial problem. So you, like me, we live to serve our clients and we live to enrich their lives. But man, this is a lot. This is a lot. And let's start with what I would say is one of the biggest things, and that's the $2 trillion bazooka called the CARES Act. So if we're all good on seeing that, I'm going to run you through a little quick piece on that. Somebody asked if slides will be available. Of course, I'll make them available through the MICPA. I've got all kinds of resources. I have a Forbes article, hopefully today, coming out on the PPP. We'll have a website tomorrow on the PPP. I've been being a clearinghouse for the Small Business Association and several CPA associations on some of the CARES Act materials. So for the last 8 days, I'm probably got a little bit more information than normal, but we'll go from there. I have noticed, by the way, that there's dissonant information, particularly about the SBA loans. So I'll try to clarify those. I'll give you all the best information I have. There are holes that I'm trying to fill. Give you an easy one. The stimulus, if you get the loan forgiven, is tax-free for federal purposes. So we're asking the question, well, what happens on state purposes? If it's a corporation, a C corporation, we think it's going to end up being taxed. And if it's a S corporation or a pass-through, we think it's not. So we're trying to get clarification on that. We're working with Treasury, working with the governor's office. As you'd well imagine, bureaucracies move slow. They move slow all the time. When you throw something at them like this, they're trying to move fast and they leave a lot of things behind. The car leaves, and sometimes they leave the dog back at the house. So there's some of those. Start with an easy one. Americans who pay taxes will receive a one-time direct deposit of $1,200. Married couples will get $2,400 and an additional $500 per child. The payments are going to be available for incomes up to $75,000 for individuals with a phase out up to $98,000, $150,000 for married couples, phase out up to $199,000. IRS has issued guidance. I can give a link to you via the MICPA. I think we all have it. In fact, I posted it, I think, on Connect. And if you aren't all on Connect, get on Connect. It's a great way for us to talk to each other in these trying times. IRS has indicated it goes to the 2018 return or the 2019 return, whichever they have, goes to the ABA and routing number. Obviously, you want clients to know that if they've changed banks, that's going to make a difference, and that's where they should be looking for it. Mnuchin has indicated through the sources I have that it was going to either go out, it was going to go out probably next week and would be in people's hands by the 16th. I'm skeptical of that. We're dealing with the Internal Revenue Service, dealing with something completely brand new. And as far as I've seen, they have a hard time getting the forms out on time, much less trying to get payments out on time, but we'll see. It is amazing. Some things are moving amazingly fast. Other things are not. This is a non-taxable transaction. This direct payment is not taxable. It is basically considered a tax refund. And no, you do not have to have paid taxes to get the deposit. People who have Social Security definitely will get the deposit. I have been getting a lot of calls. My last Forbes article hit about 200,000 views, and I made the mistake of asking people if they wanted to ask a question. I've had about 250,000 questions. No, I've had actually 250 questions. But I've had a lot of people asking me, if I didn't file my tax return, do I get this? The answer is no. And I did a show with Guy Gordon through the MICPA, and we had people saying, well, if I didn't declare my income, do I get the payment? We go, give me a break, dude. No. Unemployment, the program throws $250 billion at extended unemployment benefits, offers an additional $600 for a week for 4 months on top of the regular pay. That's weird because you're going to see people who have low paid employees who will make more money on unemployment than working, which is going to be a weird situation. I think a lot of our clients will suffer that interesting piece. You make more dough being on unemployment than not being on unemployment. A completely different thing is self-employed and independent contractors and gig economy workers can all get unemployment. So if you've got self-employed people, do a quick scan of all your returns, all your Schedule Cs. Those are people you should be talking to about this. This is obviously the time where our clients need us more than ever. Payroll taxes. The act allows all employers to delay the payment of their portion of FICA, not Medicare, but FICA only, of the 2020 payroll taxes to 2021 and 2022. I think that's a really important piece. If you take the PPP, if you take the 7A SBA, you cannot do this. It's one or the other. It's an either or scenario. My humble opinion, as you'll hear in a moment, is that the PPP is a better deal if you have a lot of employees, but that leaves to be seen. That's why you guys are CPAs and I'm a CPA with you. This is a big one. Use of retirement funds. The bill waives the 10% early withdrawal penalty for distributions of up to $100,000 for coronavirus-related purposes. That sounds ominous. It means if you were affected by the coronavirus in any way economically. I think that goes for everybody on this. We're all sitting here being economically affected because we can't get to our offices, we can't open our mail, we can't do everything else. It's retroactive to January 1st, 2020. The withdrawals are still taxed, but you have 3 years to pay the tax or roll it back over. Amazing difference in the law. I mean, we've always played around, me, I'm an IRA, geek. And in fact, I'm your official MICPA geek. I said I should just designate myself that and say, I don't want to be a board member anymore. I want to be the geek of the system, the nerd, the official tax nerd. But as your official tax nerd, I've always loved everything about IRAs and rollovers. This is wild. How about a 3-year rollover? So you got a client's got a small business, they need to get it going, they go get the PPP, and then they need a little bit more money. They could either borrow money out of their 401k or take this withdrawal from their 401k, pay the money back in 3 years, everything's all good. Remember, if anybody's thinking about doing this, you're taking out in the low market. That's the one thing I'm talking to clients about. So people are saying, hey, Leon, should I take the 100 grand? And I go, yeah, not now necessarily. Maybe we get the market back up 30, 40%. Let's do it then. By the way, I'll share my optimism if anybody bothers to ask me on what I think the market's going to do. You can also increase 401k loans. So the loan limit is up from 50,000 to 100,000. They did not, as I see, change the 5% rule, but I'm not positive on that. So you still can't take it if you're more than a 5% owner. You can't have a loan. It's also still has the 50% of account balance rule, as far as I see. But you could get, actually now, if you had a significant balance in a 401k, you could get $400,000 out of that, $200,000 out of your $400,000 balance, and not pay taxes, pay one of them back as a loan, have the other one back as a rollover. Interesting piece. RMDs are suspended if you have any clients over 70 and a half, and actually the rule now under secure is 72. In the wonderful world the world was at in February 15th, I was looking forward to talking to you all about the Secure Act. Now I'm going to talk to you all about the largest, strangest transition in American economic history, the CARES Act. But RMDs from IRAs and 401k plans are suspended. That affects literally in our shop 2,000 clients. So we're talking to them about whether they should suspend the IRA distributions. This applies to inherited and conventional IRAs both. The 5-year rule for undesignated beneficiaries is extended to a 6-year rule. So if somebody had an estate that picked up an IRA and in one of the distribution years was 2020, that distribution year could now be 2021. You can add a year to the 5-year rule. If somebody already took their RMD and they took it within the last 60 days, they can roll it back in. If they took it prior to 60 days ago, they could use the $100,000 exception. That Mulligan rule does not apply to inherited IRAs. It only applies to any distributions on an inherited IRA after the date of the act. So this is a biggie. If you have clients with RMDs, I'd suggest get a hold of them. This is the time our clients are counting on us to have touch, and that's one of the positive touches. Hey, I got good news for you. Besides in all this chaos, you're going to get a $1,200 check or a $2,400 check, and you don't have to take that distribution from your IRA yet. We can take it maybe later or not take it at all. There is a little weird rule on this, as most of you know, for a perplexing reason. In the first year, so this would only apply to people who turned 70 and a half in 2019. So if I turned 70 and a half in 2019 under Secure, I was still obliged to take an RMD. But I could take that RMD, as most of you know, all the way until April 1st of 2021. Well, there's a total free lunch here. If you didn't take your 2019 RMD, the RMD suspension goes back to the first of the year, and it is an RMD for that year, so you don't have to take either the 2019 or the 2020. So in that little narrow end, go scope down on people who are 70 and a half in 2019 and see if they took their distribution. Interesting one there. Charity changed a little bit. Corporate charitable rules substantially changed. Corporations can make much larger charitable contributions. Individuals can make larger charitable contributions. And there is an above the line deduction of $300 for charitable contributions outside of itemized deductions. So all clients can now make a $300 charitable contribution on the way. I've been doing lots and lots of talks. In fact, if you have monthly meeting groups, you want me to give a talk to your group, I'm happy to do that. Let me know. Let the MICPA know and I'll do it. I normally don't do honorariums, but I'm asking you to do an honorarium for a local food bank or a local charity. I'm in Rochester. The Greater Rochester Community Foundation has an emergency fund. I did one in Lansing the other day. I didn't actually do it in Lansing. I did it here in Rochester Hills in my lovely new office. But I encourage all of us to try to take care of people who are in bad shape. A lot of our friends and neighbors are in bad shape. This is terrible for all of us. This is the big one. Here's King Kong. 300, I have on the slide $350 billion. Okay, it's $349 billion. So a billion here, a billion there. Pretty soon it's real money. This is basically a variety of things. There's 2 SBA programs out there. One is a $10,000 grant, which a lot of people can go get, but all you have to do is say an attestation that you need it, and you pretty much get it. You have to prove you're a small business, but that's about it. And that's called an EIDL. And again, I'll make available a chart showing the difference between the EIDL and the PPP. The other one, the remarkable one, is the PPP, which is the Paycheck Protection Plan. The Paycheck Protection Plan covers companies with 500 or fewer employees, plus independent contractors, plus self-employed individuals, plus sole proprietors. So any of those companies that have suffered damage because of the crisis, which is, again, all of us, can get a loan up to about 2.5 times their payroll, their average payroll, and they can get that loan forgiven. It is a forgiven loan if you continue payroll, and you can use the proceeds to pay for payroll plus rent, plus utilities, plus healthcare, plus other employee benefits. So let me clarify. This is really, really important because the application date for small businesses starts tomorrow, starts April 3rd. And the application date for self-employed individuals and ICs is next Friday. So here's how the gig works. This is not like any other SBA loan. You do not have to show need. You do not have to integrate with other loans. You do not have to have a personal guarantee. You do not have to have any other affirmations except that you have these expenses. You have to show your 941s or show some proof that you paid that payroll. You have to show that you have certain expenses. We're doing it with spreadsheets, just showing a spreadsheet and having the 941s available. Excuse me, that's not COVID. That was just an allergy cough. And I was getting excited because this is exciting to me. So you show the expenses, you sign an affidavit that the information is true. You sign an affidavit that you're pulling this off the tax return. The process loan goes through and kicks it. And then from the 8 weeks from the application of the process through June 30th, if you continue the payroll, that loan is forgiven, plus 25% of the forgiveness can be for non-payroll aspects. Here's what's in payroll: salaries, wages, tips, severance pay. If you paid severance pay, that's included in the calculation of payroll. Okay, that's in there. MESE, Michigan unemployment tax, that's in there, and federal unemployment tax is in there. Those are all in there. Contributions to 401k plan, that's in there. Healthcare insurance, that's in there. Healthcare contributions on behalf of the employees, those are all part of the calculation. Rent is in the calculation to figure out if you're eligible, and then figure out for the loan forgiveness. It is a forgivable loan. There's a ton of information out there. Like I said, I should have a Forbes piece up hopefully today, this afternoon, I'm hoping. We've done some things with the Small Business Association of Michigan. The MICPA has done that as well. We should have a website up by them that'll take people through that as well. We're trying to focus that one on folks who don't have CPAs. But I would say absolutely positively, any client that has employees should be thinking about this. Here are the terms. If you don't get the loan forgiven, it's 0.5%. You don't have to make any payments for the first 6 months. It's a 2-year term loan, and it's on top of any other things you get. You cannot use the PPP loan on top of the payroll tax delay. That's one of the only main rules. There's a great thing out by the U.S. Chamber of Commerce that's out there. There's some Treasury guidance. I think in my Connect articles, I've been posting you some of the links to those. But if the Forbes article doesn't come out by today, let the MICPA know, and I'll send you an advanced copy. I'll send you an advanced copy and do it. This is by far the most important thing, I think, to us as CPAs, and it is absolutely timely. And this is like a milk carton. It's got an expiration date. It expires June 30th, so you've got to get it in, and get it in now. I have heard from lenders they expect to be overwhelmed. I've been talking to local credit unions around here. They're doing these PPP loans. So if you've got a relationship with a credit union, got a relationship with a bank, go do it. They are all administered through the banks. Unlike the emergency grant, which is administered through the SBA, the PPP loans are administered through the banks and through the financial institutions. Go to your client's bank now. And by the way, most of you could probably get one of these too. You probably have had people laid off. Some of you are self-employed. Some of you are in that situation. So this is very important to do. It's still in flux. I have the benefit or the curse of talking to a whole bunch of CPAs all the time, all around the country. So we've been arguing back and forth about a variety of different things. There's a hole in this that I'm trying to fill through Congress. They have identified that they identify sole proprietors and they identify employees. And the question is, what about K1 partners? What I have heard is the congressional intent was to have K1 partners use the SE portion as payroll. That is not stated, though. That's not in the Treasury's part. So what the Treasury has not indicated that, we don't know the answer to that yet. Our position in our firm is we are taking the position that K1 self-employment is payroll. We're going to the lender with that request. Worst case scenario is we get a 0.5% loan that's forbeared for 6 months in the meantime. I have heard directly from Ways and Means that they intended to have partnerships included. I have not heard that from Treasury, though. Treasury is not giving us the same information. However, Ways and Means is communicating with Treasury, and we'll see if that's clarified. This is highly in flux. On Tuesday, the loans were 4%, and now they're 0.5%. On Tuesday, where they were 10-year terms, and now they're 2-year terms. But for many, many employers, like in our shop, we kept everybody on. We're all working from home, but we're all getting paid. So we're definitely going to be able to get some of our payroll back, at least for this 8-week period. So I, again, admonish everybody, please, please learn about this, find out about it. Your clients are going to need it. Most are going to need it. You may need it. It's an amazing piece. And I was told directly the whole function of it was to keep everybody from going on unemployment, because Congress figured out that if everybody gets laid off, they got to pay for it anyway. So they're trying to keep us in business and give us some more to it and keep business rolling. It's a rare and unusual, I mean, we're in rare, unusual times. We're in unique times, but this is one of those rare, unusual things that I think actually is a win and a win. NOL rules are suspended. The Tax Cuts and Jobs Act NOL rules are suspended. Those of you know me as your Tax Cuts and Jobs Act nerd know that I hated the fact that we had this limitation, which was effectively a minimum tax on NOLs. That 80% rule is now lifted. You can now carry back losses 5 years. Obviously, any clients that are suffering in this thing, and unless they're making protective equipment or selling Clorox, I can't see how they're not in having a problem right now. They can do a 5-year rollback and go back and get their NOLs taken back 5 years. Similarly, the ELL rules are suspended. Another thing I hated about Tax Cuts and Jobs Act is pass-through entities, sub-S's, could have giant losses, and those were limited to $500,000. That's gone. So now pass-through entity can take the loss backwards, treat it as as a full loss on their income tax return. Opportunity I've already run into. Got a client's obviously going to have a terrible year. We know they're going to have a terrible year. Making lemonade out of lemons. I said, look, let's take the excess loss. We'll deduct it on your return. Let's offset it with a Roth. Let's offset it with a Roth conversion. So let's convert the Roth and do something like that. Interest expense limitations have changed as well. They're increased to 50% from 30% for tax years beginning in 2019 or 2020. And you can use the 2019 adjusted taxable income as a relevant base, which will give you way more interest deductions. Got clients in the real estate business, that'll make a big difference. I think, actually clients in the real estate business can be exempted, but other clients like rental properties or car rentals, that kind of stuff makes a big difference. So clients with lots of debt can now still get the deduction for the debt. I'll leave it to all of you to figure out what you're going to do with 168K, but I've been telling clients for about a year, hold off on large purchases anyway, thinking we were going to have a recession for a different reason. Now we're going to have a recession for this reason, which I never would have predicted. Large corporations are going to get $500 billion in loans and loan guarantees. They cannot get forgiven on it. They cannot raise their CEO's salary. They cannot do share buybacks. They cannot raise their dividend. And they have to pay the loans back within 5 years. Airlines are going to get another 50 billion. Passenger carriers will get most of that. Cargo carriers will get a little bit, a small amount as well. This 500 billion could go to other places as well. By the way, I neglected to mention on the PPP, nonprofits can get it as well. So if you have nonprofit clients, they can get that loan as well. Applies to 501c3s, not to C4s and 6s. So no associations get it, although I have heard there's a correction bill that's pending through to put it through for 6s. We'll see. But in the meantime, if you got nonprofits, think that one out as well. I've been talking to nonprofits, and again, if you want me to jump on a call with you, if I've got time, I'll be happy to do it. I'm trying to restrict my hours to 14 a day, but we'll see. This feels like tax season at Plant Moran all of a sudden. Hospitals and healthcare. The Act's providing $140 billion in appropriations to support the health system. $100 billion of that goes directly into the hospitals. The rest goes to providing PPE for healthcare workers and testing supplies, workforce and training, and supporting the CDC. So that's going to be going in there as well. Nonprofit hospitals could also get both sides of the benefit. Coronavirus testing, anybody who needs vaccine or testing for vaccines is going to be covered at no cost to patients. That's covered completely by the CARES Act. State and local governments are getting $150 billion. $30 billion are set aside for state and educational institutions. This thing is a terrible thing, but I think I'm built and engineered for law changes and changes. I prefer positive ones to these horrendous ones. I started thinking of the cascading effect that we're having on all this. I mean, it starts out and you go, oh my God, this is terrible. And I start thinking, well, I can't go to the restaurant. What happens to all the poor people who work at the restaurant? And what happens to the people at the nail salons? And what happens to the people who do hair? By the way, I need a haircut and I have to, eventually I'm going to cut my own and that's going to be a disaster. But what happens in colleges? What's Michigan State going to do? Are they going to refund the tuition? Are they going to refund the, the room and board? What are the bars in Michigan and East Lansing going to do? Just the cascading effect of all this whole thing. I do hear that marijuana dispensaries are doing pretty well though still. There's $45 billion for disaster relief. There's $25 billion for transit programs, and then there's a portion in here for higher ed all over the place. And my favorite, one of my favorite colleges, Walsh College. I worry about them. What are they doing with their students? How are we going to help them? And how are we going to keep this going? And how are we going to manage it? What are we doing with all our things? Ag also gets an increase in the bailout program in ag from 30 billion to 50 billion. I've actually heard that ag is doing okay. They're not getting hurt as much. They're getting hurt from exports, but I've heard that some of the local ag that stays in there is definitely improving. So there's a copy in this of the act. There's plenty more to do this. I will run these slides through the MICPA. I did want to share one more piece with you if you don't mind, and this is a just a second piece. Yeah. Let me go back to the beginning. Just a couple things I want you to think about, if you don't mind. I've been talking to my business owner clients. I have a lot. And so I'm trying to help them go through this crisis. And I just thought I'd share these. You're business owners. All of you, I think, are business owners. So I just want to share some thoughts with you. And I want to share two rules that I'll get to rule number one and then rule number two. And then we're going to open up questions. And I know I've already seen that you have many questions. And I'm glad. Rule number one is put your own oxygen mask on first. You know how you're on the airplane and they always say to you, in the event of an emergency, oxygen masks will descend from the ceiling, and you should always put your oxygen mask on before helping others. Take care of your company, take care of your family first, so you can take care of others. We are servants at heart. We wouldn't be CPAs if we weren't. And as servants, we have to be okay to serve. So I just got some ideas for you I want to share, quick ones. First, foremost, make sure your durable and healthcare powers of attorney are in order and somebody knows how to get their hands on them. I hope nobody on this call gets the virus. I have a nephew right now in ICU in Jackson on a respirator with COVID that he caught at a Chrysler plant when he was working on their assembly line, where one of the employees died of COVID. It was very serious. We had him in absolutely critical condition. Your thoughts and prayers are appreciated. He's down to 50%. He's up to 50% on his oxygen. So that's the good news. I'm learning all kinds of weird stuff I never wanted to learn. If your parents are living, check on their healthcare power of attorney. If you have kids over the age of majority under your control, make sure you got a HIPAA waiver on them. You can't talk to your kid's doctor if you don't have a healthcare power of attorney or HIPAA waiver. So, like my sister, luckily, because her brother is a tax attorney, did give her a healthcare powers of attorney. So somebody could talk to the doctors, but very important thing. Make sure you do that, please. Make sure you got your health insurance policies listed. Make sure somebody knows how to access those. If your parents are living, make sure you got their health insurance. Kids over the age of majority, same thing. Somebody's got to take care of this stuff. God forbid something happens to us. That's the first question. Who's going to take care of things? Put your oxygen mask on first. Same thing, HSAs. Get your HSA stuff in order. Have somebody know how to access that, please. Make sure you got an executive backup plan of at least 3 layers. If something happens to you, who's going to take care of things if you're quarantined? What if your head tax person's quarantined? I mean, we're going through our shop right now, and luckily we've got a pretty deep bench. I've got 32 advisors. I've got backups and backups and backups, and we put a couple of advisors on each case when we're working with somebody. But if I get sick, who's going to take over my job? And if that person gets sick, what's happening? So 3 layers of backup. Level 1, level 2, belt and suspenders, and then something else, Velcro or something. Make sure your personal finances are in order. If you got a little spare time, and I bet you don't, but you should make sure your financial plan's in place. And do you have enough cash reserves to go through personal expenses? And if you establish your credit lines, and is your credit score good, is there any immediate fixes? It's almost too late to do that. I'm keen on rebalancing portfolios. Right now, I've been doing a lot of rebalancing. Our portfolios, luckily, were pretty well mixed out. We had lots of 60-40s and 50-50s. They didn't kill us. We've been going to clients and saying, look, we're going to rebalance. And they said, oh, good. You're going to take me safer. I go, well, actually, if we rebalance, we're buying more stocks because they're down 30% and the bonds are only down about 6%. Lots of stuff on tax loss harvesting. I've got some pieces on that if anybody's interested. Taxable account, you'd sell it, the taxable loss. Avoid the wash sale rule. Had a big issue yesterday. Somebody was asking me if I have like a Vanguard total market index, can I sell it and buy another total market index? The answer is no, but you can sell it and buy a S&P 500 and a small cap index, and that's not a wash sale. Or if you own American Airlines and you want to sell it and buy Delta, you can wash it that way. If you own Pepsi and you want to buy Coke, you can do that and sell it and wash it. You can wash funds a lot easier or wash ETFs a lot easier. You cannot wash in an IRA, you cannot wash in a loss, and you cannot wash with your spouse. So I can't sell the S&P 500 in my taxable account and then buy it in my Roth. That'll be a wash sale. But I could sell the S&P 500 in my taxable account and buy Dodge and Cox stock, or I could buy Vanguard Wellington, or I could buy a Vanguard Value Index, and that would be easy to do. It's a great time to set up Roths for yourself or your kids. You've got now until July 15th to do a contributory Roth for yourself or your clients or kids for 2019 plus for 2020. So it's a great time to look at Roth conversions or Roths. If you got a 401k plan you want to keep contributing, I'm doing mine in Roth. I'd rather take the gain back. I'm pretty confident that someday this will end. Like I said, you get old enough, you've been through everything. So I've been through getting number 42 in the draft in Vietnam, to seeing 9/11, to seeing the W-shaped recession of the 80s, to seeing, to going in the fallout shelters when I was a kid thinking the Soviets were going to blow us up and they're not Soviets anymore. Everything bad that I've seen in the past always ended. So I'm kind of confident this will come back sooner or later. I'm hoping sooner, but it could be later. But in any event, it will come back. So I've been keen on getting that gain back tax-free. Also, go look at parent Roth conversions. You got clients in low tax brackets. Probably a lot of us are going to be in lower tax brackets. Think about doing a Roth conversion this year. I think those would be good ideas. Okay. Do your company cash flow. Get the Clint Eastwood budgets out there. Do the good, the bad, and the ugly. The good is this thing's done we go off the infection vector by April 30th. That's my good scenario. That's the best scenario I can think of. The bad scenario is the infection vector continues out into June. And the ugly vector is it just keeps on going until we get a vaccine, which I don't see. By the way, I want to add one just piece of perspective, okay? And I don't want to sound like Johnny Sunshine, but I want you to realize that 7,399,000,000 people don't have coronavirus, okay? And 360,000 babies were born today. So this is bad, but this is not the end of the world. So remember that one. Make sure all your company credit lines are in place. I think the PPP absolutely goes in almost everybody's checklist. Go look at it right away. I would pull capital for liquidity issues. If I had a line, I'd pull it right now. It's a lot harder to get the money back than it is to not give it to you. So I know that sounds terrible and it sounds like I'm being mean to the banks, but if the bank gave me a 500 grand line of credit, I'm going to go pull it and go stash it in the bank, right? Maybe not that bank, but I'm going to stash it in a bank. Review and revise all your capital spending plan. Obviously, all shore leaves are canceled, but I would say, for the time being, I would cancel shore leaves on spending. And then, do you have an effective customer communication plan? What kind of content for clients and prospects? Weirdly enough, we've been getting clients in the last 3 weeks. Actually, it's a bigger flow. We're getting a bigger inflow of clients wanting financial planning or clients wanting communication. I guess maybe no surprise because we're in chaos. But we've been getting all kinds of new clients, not just old clients. Our old clients are calling us. About 60% are going, oh my God, is this the end of the world? And the other 40% are saying, what are we going to go buy? But a lot of people are contacting us, and it's weird. We're seeing it. So I know it's weird times you're talking to your clients, but if you had prospects, somebody should be talking to that prospect. If I had a business owner that I was talking to back in January, which I have, I called him up and said, hey, I'm thinking about you. How you doing? I don't even talk about business. I said, how you doing? How's your family? How's this living in COVID seclusion? I want you to think this out. Every single one of our clients and every one of our prospects and every potential client is in exactly the position we're in right now. They're all staring at a computer or doing something, and they're all accessible. And this is the only time in history we know exactly where they are. So why don't you do a little webinar for your clients, or why don't you do a little WebEx, or tell them what's going on, or share some of the information, and just call them up and say, hey, how are you? I mean, one warming thing about this for me is I get more messages from my clients and friends asking me if I'm okay than I do about what are we going to do, which, I mean, that's a good thing. I like that. Look at the business taxes. Is this crisis going to generate an NOL? I think we do have the state issue on the forgiveness of loans, and I think we have a state issue on NOL pieces. I'm working on that with MICPA and the Treasury, but we don't have answers yet. But business taxes, clearly something you should be paying attention to. It sounds Machiavellian, but you ought to monitor your competition for ideas or flaws. I mean, the people on this call are paying attention to what's going on. There's a whole bunch of other CPAs that aren't. There's a whole bunch of other CPAs that aren't technologically proficient. I've had some of them on my webinars who will sit and get five people on their WebEx trying to get signed on and yell at and not mute their microphones. But what are other people doing, and what are your clients' competitors doing? watch their employees. There's going to be a lot of good employees getting getting hurt in this. There's going to be a whole bunch of people getting hurt. And as we look at those people getting hurt, there's going to be some opportunities to hire people. There might be some CPA firms that don't make it that have tremendous tax people or tremendous people. And we're going to be really busy. So it's weird. What a really weird thing is? We are actually getting calls from competitors, smaller competitors that are going, how are you guys doing this? How many of your people did you lay off? I go, none. They go, how many clients did you lose? I go, none. They said, you're kidding me. I go, no. They said, well, how are you meeting with people? I said, we have a WebEx. And the cool thing is now an advisor in Tampa can bring me in on a WebEx and I can talk to a client about grats or something. And I can tell them what I think about tax loss harvesting. And I can add anybody on my team into this meeting. I can have anybody on my team meet almost anywhere. So watch the competition. There's going to be flaws. There's going to be weaknesses. Look for the weak armor. This is an ecological event. And just like COVID, some people will survive the virus and some people will survive the economic fallout. And you'll get to my second rule in a second. So the last part is protect your team. Make sure your A players get whatever support you can. Our shop, we made sure, we said to everybody, look, take sick time, you need it, don't worry about it. It's not going against your sick bank. Don't come into work if you don't want to, you don't feel safe. If you're safe, you can come into work, but you follow social distancing. We are an essential business. We have to do this. But first of all, foremost, take care of your family. That went a long way. We gave our employees ideas. Go watch TED Talks and give them to your family. Have a family reading list, kind of cool things like that. But support your A team. So that gives me, I gave you rule number 1, put your oxygen mask on first. I'm going to give you rule number 2, always live to fight another day, because this crisis will end, but you don't have to. So I'm going to stop sharing, and you have to look at my ugly mug. And now I bet we have no questions. I bet we have none. So Jody, you're on, girl.
Okay, let me just enlarge this great list of questions that we have here. Go to my chat and try to scroll back to the top, and we'll get through as many as we possibly can.
Okay. And by the way, on the chat, if that was useful, let me know. I don't mean to be preachy to y'all, but I love you. So.
Okay, let's start here from Teresa. And you may have already covered some of these in the presentation. Is the EIDL grant of up to $10,000 taxable income?
I think no.
Okay.
I'm pretty sure it's not.
From Charlene, can a single member LLC taxed as an S Corp apply for both the PPP loan and the SBA's economic injury disaster loan? I've been told you can't apply for both.
I think you can only apply for the PPP or the EIDL.
Okay.
And by the way, I have a chart which I will share with MICPA. In fact, hang on one second. No, it's too complex. I have a chart that goes through the comparison of the two. So Charlene, or anybody who's interested, just go through Jody and I'll get it to her and she can get it out there.
Perfect. From Teresa, if a business owner applies for and receives a $10,000 EIDL grant, then qualifies for a PPP loan for, say, $30,000 in total, all of which is used to pay wages, rent, and utilities, and the business owner applies for forgiveness, what is the forgiveness amount? Would they only be forgiven $20,000, which would be 30 minus the 10?
We are working on that. We think the answer would be you'd be forgiven the 30, but if they already got the EIDL, you can't apply for both at the same time is how I understand it. So this goes back to the question we had before. We'll try to get that answer sorted out. We don't know the forgiveness aspect of that because the forgiveness doesn't say it's offset against the EIDL. Intuitively, Teresa, that would seem like you should offset it, but I don't know the answer to that one.
Okay. From Jamie, how can CPAs get compensated for assisting clients with the SBA applications?
Great question, Jamie. And hi, Jamie. Glad you're on the line. Jamie's a good friend and a fellow director at the MICPA, does a great job. The CPAs can get compensated, and they get compensated from the lender. So you work out the deal with the lender and you bring the application in. I don't know what the exact compensation is, but I know the Treasury has issued guidance. And everybody, if you're interested in this, go to Treasury guidance on payroll protection plan, and then go to the box called lenders. And it definitely provides that attorneys and CPAs can get compensated from the lender for helping work through a PPP application. So you can charge a fee and get the lender pay it. The lender pays it and it does not come out of the loan, by the way. So the lender pays it and doesn't come out of the loan. And I think a lot of us could could do this. Some of the bigger CPA firms are not going to go that way. So I know the big firms I've been talking to are not doing that. They're just doing it as a regular part of their client service and saying, client's going to pay me to set this up. But the CPA can get compensated. The exact details, Jamie, I don't know. So it would be working with the lender. What I'm thinking of is a lot of the credit unions, I've been talking to them, they are doing these loans. They're probably going to be a real friendly place to work with. It might be like a specific package, and you say, I'm going to bring a loan in and I want a $500 fee. And I think that actually doesn't even come out of the lender's package. It's just part of the whole deal. So it's a great question, and it's got a good answer. I wish I could be a little bit more specific about what happened, how you get compensated, but they just issued the rule on Wednesday, and it only says you can get compensated. It doesn't say how.
Okay, from Missy, and this is in regards to the individual and family payments. What about college students who are dependents on their parents' loan? It says a child is defined by 17 years and younger.
I have been hearing that it is the category of somebody who would formally be called a dependent, but that's a not a formal interpretation. The 17 or under seems to be a more logical interpretation. It would seem that the college students that didn't file a tax return might be considered children because they'd fit the category of a dependent, or in the case of my kids, they're dependent until they're 30. But if I take so let's say I have a college student doesn't fit all the rules of dependency, you'd get the $500 for that child. I would presume that's the case. However, remember, they're going back to the tax return. So they're going to the 2018 or the 2019 tax return. And I don't know how Treasury is going to handle that. Recognize, by the way, again, important, make sure your clients know that if their status has changed for 19, they haven't filed a return yet, that's going to be an issue. You're going to have to get that through the IRS. The IRS has issued some guidance. It's up on their website.
Okay, this one from Val. I'm not sure what this is in
This is the payment.
regards
I
to.
know the question,
Okay.
Jody. She's asking, what about married filing separately? Do married filing separately still get it? Yes, they're under the category of other. As you remember, Tax Cuts and Jobs Act made married filing separately completely, different. So it's only the amount of income on MFS. So as I'm seeing it, it's the MFS rule. I don't think they're aggregating. So if one spouse has 150 grand and the other one has 100 grand, I think they would probably allow it that way. That's how I'm reading it right now. The Treasury, the Act has not specified what happens on MFSs, though. Married filing separate.
From Jeff, any guidance on PPP loan definitions of retirement benefits, safe harbor portion paid by employer? Do you include profit sharing contributions?
So Jeff, hi, good to hear from you. I get to see my friends, or at least virtually see my friends, which is good. Good to hear from you, Jeff. We have been looking at it. So I've been talking to several larger CPA firms. Our definition of retirement benefits it's the employer contribution to the 401k plan and the employer contribution to profit sharing portion. And if it's safe harbor, that would be included. So it's the uniform opinion of everybody that the definition of retirement benefits is at minimum that. One that we got in the middle that we don't know what it is we haven't figured out whether group life insurance is an insurance benefit or a retirement benefit. It's clearly not a retirement benefit, but the definition in the statute is health benefits and insurance. It doesn't say health insurance. It says health benefits and insurance. So we just created an app. We're finishing it up today and we're going to submit it tomorrow. So I'll know how it works. We put the life insurance, the group life insurance in there because we took the approach that we're going to over apply and let the lender tell us differently than under apply. So we don't know the answer to that. We do have a client that had disability, but it was in their health insurance. So we're including the disability in there as well. Okay.
From
I had a private question, Jody, so I just want to answer. I think everybody would like it.
Mhm.
And it is, how do you elect to delay FICA tax? And can you elect to do this at any time? And I don't know the answer to the mechanics of it, but you can delay it immediately. So you'd want to start the delay, and I think it's going to be on the next 941, but I don't know the answer on that, Garwood. So we'll work, keep your eyes open for it. But it is the delay. Remember, you can't do both the delayed FICA and the PPP. And also remember, you're only able to delay the employer portion of FICA and not Medicare.
Okay, from H. Toms. Did I hear that correctly? Inherited IRAs don't get RMD waiver for 2020.
No, I, in my normal fashion, started talking quickly. I hope I didn't say it that way. Here's the clarified statement, and I'll clarify what I did say. Inherited IRAs do get the RMD waiver. They took the RMD waiver that they did in 2009 and just changed the date. So inherited IRAs are subject to the RMD waiver. What I said was, if you had an inherited IRA and you already took the RMD, you're stuck. So if you're 70 and a half, say you're 72. So mom is 72. Mom takes her RMD. Okay. So mom takes her RMD and she took it on March 1st. Well, and she does, and then we get this waiver. You can go back and say, okay, mom doesn't have to do that. She rolls the money back in her IRA. She's done. Let's say mom had an inherited IRA from her mother and she took the RMD on March 1st. She can't roll it back in. So just to clarify, so everybody knows, inherited IRAs and regular IRAs have an RMD waiver. Regular IRAs can use the 60-day rule. Inherited IRAs cannot.
Okay.
Okay. Payments to independent contractors qualify as compensation under PPP. That is the way everybody seems to be reading the act. Yes, that's how we are reading it. It clearly is indicated in the statute that independent contractors qualify for PPP and their self-employment compensation counts.
From Linda, we have clients who have already filed or filled out applications. Will they be considered if they submit them prior to April 3rd?
Good question, Linda. I was battling that all morning. You must be on my email chain with me. I've been looking at that, trying to figure out what to do. We had one client who submitted an app to Huntington Bank, and they said, well, we'll get back to you in 3 weeks. And then we've had credit unions talking to us today saying, if you submit the app tomorrow, we'll process it as soon as we can. So I think I would contact the lender and see if it's possible, whether it's appropriate that you withdraw or you stay on the 7A application. The application shouldn't be different. It's a 7A or a 7A. So it's important to do that. By the way, Frank Arvi, my old buddy from Plant Moran, one of my best friends, one of the most handsome men in the world, also pointed out on the Zoom chat that inherited IRAs do get the RMD waiver. So thanks, Frank. You're keeping me on the straight and narrow.
Somebody's got to, right?
Yeah, somebody. It's only Frank can do that.
John asks, do we have to include foreign non-expat employees in our count towards the 500 max?
I think you do, and you can't use those as payroll though. So I'm reading that weird. That is in there, John. I think the 500 is all employees, but the ones you can get the withdrawal on is for expats. That would be one I think we'll try to get a clarification on. But if you have foreign employees, unless you're in the hospitality or the food business, you'd have to count them toward the 500, but you couldn't get the PPP on them. I would say you might have the ability, depending on where you paid them or how you paid them, if you paid them out of the U.S. or you paid them foreign, maybe in your declaration, you might say, I'm only using domestic employees if they were 500 and do it that way. That would be, it's a great question. I wish I had a better answer for you, but that's as good as I can give you right now. You know who you might talk to if you're not at Clayton and McCurvey. Clayton and McCurvey, great firm, great friends, terrific CPA firm. A lot of my Walsh students over there. They have a great international practice. Maybe they would have an answer to that. So, John, maybe you drop an email on Rob Dukowitz and ask him if he could have Margaret Amsden or somebody help you with that.
From Brian, the first certification requested on the application asks if you need the money to continue operations. Isn't that a requirement for need?
It's a requirement that you need the money to continue for operations. I would suggest in most cases we need the money for operations, unless you're in not having any change in your income level. So in the case of our firm, we bill on client billings. We bill on the amount of assets we manage. Ours went down, our assets went down, and our quarterly revenue went down dramatically, whereas expenses stayed the same. So we do need the money for continuing operations. I suppose I could theorize, that there are situations maybe where you don't at all, where all employees are continuing. I guess if you're in the personal protection equipment business, you probably don't need this. So.
For the PPP loan, do we need to bring back to the payroll employees we've laid off and are now getting unemployment?
I don't see an earmark in PPP for specific employees. It's for the amount of payroll. So it's the amount of money you're paying, and it's the number of people. So if you laid somebody off and they're getting unemployment, you hired somebody else back, I think that would suffice. I did have a discussion with a fellow attorney CPA this morning who said, why wouldn't you take the PPP, have everybody go collect unemployment, let them come back just before the PPP is over, get a partial waiver, and let them still stay on, another form of government assistance. And I said, well, then you wouldn't get the forbearance on the loan. They said, yeah, but you'd have some working capital. So you'd have a lot of working capital. So interesting piece. By the way, really important thing on the PPP, compensation is limited up to 100 grand. I want to make sure I say that. Compensation is limited up to 100,000 bucks on, so if you got somebody making 150 grand, you can only use 100 grand of their comp. So remember that one. That's really important.
Okay.
By the way, going back to one other one, people have said they already filed under the old prior rules. In fact, this Monday, the loans were 4% in 10 years, and now they're 0.5% in 2 years. So this thing is changing quite rapidly. I have heard from my bank contacts that they're saying they aren't even getting that we're getting the information as fast as they're getting the information. So it's weird. So let's keep on going. Sophia says, does payroll include commissions? I'm not jumping on your thing, Jody.
You can read them yourself if you want.
No, I like hearing you. And you've got a nicer voice than I do.
Oh, thanks.
If a client pays commissions without much sales, can that cover qualified payroll count? Yes, commissions are definitely included in payroll, and commissions, yeah, they do. And if client pays commissions, it'll be covered as payroll cost. When you get to the loan forgiveness, obviously you won't have as much payroll, so you won't get as much forgiven.
This one from Bell. I have employees that would get more money on unemployment with the extra $600. Some of the employees would not. My company is unable to perform any work during this time. Can I lay some employees off that would benefit and then get the PPP loan for employees who would be hurt on unemployment? You want to take that one first? There's a second part.
Yeah. So again, this is one we're playing with and struggling. I mean, we've had 5 days to think about this, so it's tough. I have two schools of thought. One school of thought is saying, yeah, lay the employees off, let them get some unemployment, and then keep the other ones, and then recognize that part of the PPP is not going to get forgiven. So remember that whatever you don't bring back doesn't get forgiven, and part of your PPP forgiveness includes non-payroll stuff. So it does include rent, it includes utilities and other things. They did change that, by the way. They made the amount that was forgiven be limited to 25% of the forgiveness amount. So obviously somebody thought this out when they made the first rule and said, well, I could lay all the employees off and still get my rent forgiven, and I may as well do that. They said, no, you got to have some employees come back. So you're battling the confluence between loan forgiveness and a tax-free grant versus expense and a really cheap working capital loan. They're not bad options, but I think you're going to need to model it a little bit. I don't think there's an easy answer there. I'm leaning toward the forgiveness, get the tax-free piece, keep your dry powder for other things. But again, I've got 5 days into this. Bell's second question is: subchapter S 50% owner employees. Can you pay her payroll with a PPP loan? Yeah, I think you can. That's the one I've been working on, though. Yours is easier because subchapter S corp owner employees are employees. I'm wondering what happens when you're in an LLC. So if you're in an LLC, then interesting, there's an interesting question. LLC, we don't know. The congressional intent appears to be absolutely yes, SE portion of LLC income, but different. By the way, I don't think you could pay dividends on a sub S with a PPP loan. You'd have to pay salary. Just my thought. That's just a thought. And remember, gang, this is brand new. I'm your brand new guy on this. So I'm as good. I hate being a worthless expert, but I'm this is as good as I can get for you.
Charlene asks, can a medical marijuana dispensary apply for the PPP or the SBA disaster loan?
Medical marijuana dispensaries have been open, thank goodness. So they're still out there and still doing business. And I understand business has been quite high, and it's a budding industry. But I believe they could if they were affected. If they have a negative effect and their business is down and they've been harmed by it, then I don't see any reason. There's no restriction on this NAIC code of why you can't. By the way, if you do have a business with over 500 employees, there are certain NAIC codes that can get in there, and in other words, they can get in with more than 500 employees.
Okay. From John, can employer receive $10,000 grant from EIDL and apply for Paycheck Protection Program?
I think not. I think you get the 10,000 grant from EIDL, you can't get the Paycheck Protection, but I'll double check that, and I'll send that chart to Jody so she can get that out there. Hey, Jody, I had a private one That was from a good friend of mine, Ted Baginski. So if anybody knows Ted, one of my favorite guys, one of the smartest planners I know. He was talking about financial planning, that we need IRS guidance on whether we can roll over a 2019 that we deferred into 2020. Ted, I just heard from Natalie Choate that you can, and Natalie is pretty convinced of that. She's using IRS guidance from 2009, and given that IRS did just change the dates, I'm going to agree with Natalie. So I always appreciate this kind of intellectual stuff. But if I had a 2019 RMD deferred into 2020, I would suspend it. Go ahead now, Jody.
Okay, from Regina. Self-employment income is considered for payroll costs. How do you show the payment of the payroll cost to qualify for the loan to be forgiven?
Good question. I think you're going to do it off of 1040. I think you'd have to do it by submitting the SE. So that would be the part of it. By the way, again, remember, the one thing that doesn't count as payroll is the employer portion of SE or FICA.
A, a fun one from Sam regarding your haircut. Apparently, Leon,
Yeah,
does the bill provide Flobies for everyone?
man, Sam, I'm going to need one pretty quick. All I have is pet trimmers here. I'm going to look like my golden retriever pretty soon.
From Jay, for PPP loans, is the average monthly payroll for calendar year 2019, or do fiscal year taxpayers use their fiscal year ended 2019?
You use the 2019 payroll through February. It's the 12-month period ending February. So that's the average monthly payroll of that period of time. So it's up until February. I did have a private question on, can we undo a Roth conversion? So if we already did a Roth conversion, can we undo it? No news on that. I would love to see us be able to undo Roth conversions like we used to be able to do, but I don't see it. So.
Okay, from Paul, can you get the $10,000 from the SBA and a PPP from your bank?
Yeah, same question we've been having a lot of
Mm-hmm.
times. I think the answer to that is no, but we'll have to find that out.
Everybody wants to know.
Yeah, and that's a good idea. The EIDL deadline on March 30th for St. Clair was March 30th. I think I'm almost certain they're going to expand that.
Okay. From Jerry, to confirm, Michigan unemployment and FUTA can be added to payroll costs for PPP purposes.
Yes, Jerry, that's my understanding. It specifically seems to be in the statute. It even says state taxes paid on employment except payroll taxes.
Ashley asked if this webinar will be available to rewatch. Yes, Ashley, the MICPA is recording this, and we will be posting it and making it available.
Okay.
From William, do 501c5 labor orgs qualify for either EIDL or PPP loans?
I thought at first, William, they did, and then I looked into it deeper, and 4s, 5s, and 6s are all excluded from nonprofit. The reason is something about lobbying. So I think when they were putting the bill together, there was something about lobbying organizations going out and getting the PPP loans. You know, there was a lot of hair on this bill when they put it in and passed it, and so they didn't want or associations that, like for example, MICPA can't go get a PPP loan right now. So we can't. We need one, but we can't get one because they're worried that we would have lobbied on the bill to get it. You might have noted that members of Congress and the president's family and the vice president's family can't get a PPP loan. They can't get any of the government. They can't qualify for any of the provisions of the act. So it's just that's an interesting piece. So my answer is I think no. That was a long no, wasn't it?
From Frank, what's your outlook on the stock market? What asset classes do you favor?
I favor for my own self, Frank, anything that has antacid, and they just pulled Zantac, so now I've got to figure out something else to take. Great question, Frank. The stock market has recovered from every prior thing that's ever happened to it, from World War II to 9/11 to the mortgage crisis to other things. We've never had anything like this per se. I've never seen a bull market and a bear market in a month. We had one of the best runs in the stock market since 1938. We had one of the worst runs in the stock market since the Great Depression. So I am highly, I do think, Frank, so I'm answering the question really short. I don't want to get into too much of the stock market. I think the S&P has priced in a 20% decline in earnings and has priced in a new earnings multiplier. So I think lots of what the S&P has done is mostly priced in right now. So I would say the damage is here. We'll probably see a little bit more, but I don't think I'm going to see a lot more damage unless the infection vector goes into what I call the bad of the ugly scenarios, which hopefully it won't. Asset classes I favor, I can get in trouble with this, so I'll just say in general terms. In general, every time I've seen oil below 20 bucks a barrel, I like to back my pickup truck up to the pump and fill it up. Today, oil's up, so I've been buying oil ETFs, and I've been buying oil stuff. Today, I'd buy a little bit more oil, although it's up a lot. I was arguing with somebody today about regional banks. The banks are going to get 5% on this SBA system. 5% of $350 billion is a lot of money. I am wondering if the regional banks are worth it. They're down about 60% right now. If you got true stamina, you might try to figure out which airlines will survive. Some of them will and some of them won't. The air cargo carriers are going to keep going. I don't know how you all been doing, but I've been buying everything on Amazon. I think my Amazon driver and I are really good 6-foot friends. So I would say that's in there. I did buy Amazon stock in full disclosure. I bought it early in this. I bought Clorox stock in this in full disclosure, and I bought Zoom in full disclosure. And luckily, no one's hijacked our Zoom and put pet pictures on it or anything like that. So asset classes I favor, Frank, consumer staples, staying away from some of the international stuff. Believe it or not, I'm buying into China. But that's about it. So let's go on, Jody. Sorry, I didn't mean too diverted.
From Rick, I have a client that just started a new consulting practice in January of this year. He had 2 weeks of client work and then everything shut down. Is he eligible for unemployment without a long history of earnings?
Great question. I'd try. I'd give it a shot because the emergency declarations aren't, they're huge in the act, and I haven't gone through all of them. So he may be able to do that. He might be able to get the $600.
From Maria, a question about limits for payroll costs for retirement plans, limited to prorated portion of 100,000 of wages.
I'm not sure I understand the question. The limit for payroll costs is payroll is limited to 100,000 plus healthcare plus retirement, the employer retirement plus insurance. So that's what I think. If I answer that, good. If not, Maria, put it back and we'll try doing it again.
From Jay Garwood, can an LLC that is 100% owned by a foreign corp, Netherlands, qualify for the PPP loan?
I'm not sure. I think not, but I'm not sure. Again, back to Garwood. Again, I'd pop if you got a friend at Clayton McCurvey. I'd ask them that question. That's who I'd ask. So.
Great. From M. Lockwitz, with the CARES Act for employees that will keep on, will the expanded coverage of up to $100 or additional $600 per week be a cost that we have to cover, or will it be subsidized by the funds from the federal government?
Feds. It's all from the feds. We don't have to pay that.
From Teresa, Leon, as a former P&Mer, thank you so very much for this presentation. You can apply for both EIDL and PPP. If awarded, you can select which loan to accept. Only the PPP and the EIDL grant have the potential to be forgiven.
Thanks, Teresa. And actually, I was on with Jim Weed yesterday talking to the governor's office, and we were using an excellent chart created by Plant on that exact topic. And that's the one I was going to share. So, Teresa, thanks. And I was Frank Moran's attorney back in the old days when I was over at Plant. My office was kitty corner to Frank, and we used to drink gin together. He was one of the greatest guys I ever met.
We do have people asking for the chart to comparing the EIPL and the PPP that was mentioned. So we'll make sure that we get that posted on the MICPA site.
Yep. Right. And I think Sophia's question is the same as our previous one.
Okay.
On the 100% foreign-owned company, and we'll try to figure that one out. And I refer Sophia to hopefully, I'm not going to irritate my friends at Clayton, but Clayton might be able to answer that.
We also talked about the Roth IRA conversion. So from Ellen, what if a person was a dependent in 2018 but is no longer dependent in 2019 but has not yet filed for their 2019 tax return? Do they get the stimulus check, or will there be an appeal process to get one once they file their 2019 tax return?
So Ellen, when I looked at the IRS guidance, they seem to indicate there's going to be some kind of process that they're going to indicate on how to contest or change their process, how you can change it. They haven't told us what that is yet because they just gave us their guidance on Tuesday. So if you go to the IRS site, you'll see some guidance on the thing. There's also a great New York Times article on it, and there will be some system by which you can change it. You can say, you know, I only got, I didn't get anything in 2018, but I should have got something in 2019 because I did file my return.
From Mark, what does an LLC filed as a Schedule C with no formal employees report as average monthly payroll on the PPP application?
So Mark, as far as I know, it's the SE income. It's the amount of SE income, which probably on your Schedule C is going to be net income at the bottom line. So I'm gonna assume it's that. Adding back in your share of employer of your share of healthcare that you paid, which you'd put on the front of the schedule, your 1040, and adding back. Now there's a good question: is what do you do in terms of adding back the the benefits, employer paid pension plan, stuff like that. If it's under 100 grand, I would add back in health insurance. I would add back in my share of the half of the FICA tax, and I would add back in any contributions to a pension plan. But once it hit 100 grand, it wouldn't matter.
From Elizabeth, is it too late to file the 2019 tax return for consideration on the $1,200 or $2,400 government payment?
Good question, Elizabeth. I don't know. I would say the IRS is going to be using a data bank of who they've got on the system. So I would probably say you might get it in under the wire. Mnuchin said he's going to try getting the checks out by the 15th. So we're back to our old deadline, at least for that. I mean, if I already had the return ready to roll, I'd roll it. Especially if it was a refund, I mean, I'd roll it. But if it meant the difference between getting it or not getting it, I would probably try to file the return.
You stated we are essential services. Is this a fact for CPA firms and under which category?
Financial services.
Okay, that's another one about the chart that we will get out. Follow up on Sophia. What a foreign corporation that files a U.S. branch return and PPP. That's from Jamie.
Yeah, that's the same question again. I think that's our big question. Michelle is coming up with definitions of the 100,000 compensation max. Michelle, I have heard from at least 4 places, and this is coming from EY and some reasonable. I'm not saying that EY is always right, but they're pretty right. It's compensation up to 100,000, and that's just wages. Everything else that you add the stuff after that. So, and it's not net pay; it's gross wage. So I've heard those in some of those interpretations too. The uniform interpretation I'm getting from some pretty good CPAs is that it is compensation, gross compensation up to $100,000 before taxes, paid by the employer, by the employee. So if I make 120 grand and I paid into FICA and all that stuff, it's 100. I got 100 grand. If I made 95 grand, it's 95 grand. So if it's the limitation is $100,000 of gross wages. I've had 3 solid people confirm that. So I'm going to go with that. I'm going with that definition.
From Mark, are federal first quarter income tax estimates deferred to July 15th?
Don't know.
Okay. From Heather, who counts towards the 500 employees for PPP? If a U.S. corporation has a plant in Mexico, do those head counts count against the 500?
Heather, I think we talked about that. I think the answer is they do count against the 500, but I think we have to double check the act.
What if businesses, from Carol, what if businesses that apply for PPP, such as restaurants that cannot do carryout, are not allowed to open prior in time to pay out the wages for the PPP loan?
They'd still get potentially a partial forgiveness, and they'd get a really cheap working capital loan. So, I mean, so I had a restaurant business. I understand what you're saying, and this is killing me because I love my restaurateurs, and here in Rochester, I want to go back to Lino's and have some spaghetti and meatballs. And I can actually, luckily, I can get it carry out over there, which is really good. If you're in Rochester, go to Lino's and get some spaghetti and meatballs, and get a glass of wine and have it in the parking lot. If they're closed and they still could get the PPP loan, they still can do it. They don't bring anybody back because let's say we keep the sequester going or whatever else, not the sequester, the quarantine. They would still get a partial foreclosure, forgiveness, and they'd get a 0.5% working capital loan. So I would say, I do it, even though you might not get forgiveness. Go ahead and do it.
Linda asks, my mother is claimed on my brother's return because he provides her with rent, but she lives on her own. Is she eligible for $500 or $1,200?
So if your mom files her own return, but she's claimed as a dependent on somebody else's return, I'm reading in the act that it's children, not dependents. So it might be that she'd get the $1,200 if she filed her own return. she might have filed her own return and went through that. Now, so if she's collecting Social Security and filed a return, Linda, she might get the $1,200. I read the act the way I'm reading the act. I've only read it. I haven't read the whole thing through. I've read most of it through that relates to us. I haven't read some of the provisions about, testing and stuff. She might get the 1,200.
Okay. From Stuart, is the retirement benefit computed on a cash basis or accrual basis?
Funny you asked that. I was just talking to the CFO of our client because we were going through that exact calculation because we accrue the 401k contribution from the company, but we pay it later. So we built two projections. We're giving it to the lender tomorrow morning. So we are giving two projections to our lender. We are giving them the projection with the cash basis, which shows the 2018 contribution made in 2019, and we're giving it to them the one with the accrual. As a CPA and as a professor, I say the correct approach is you use cash basis for everything on this. That's my thought. Or if you use accrual basis on everything, you don't get to mix and match accrual and cash. If you did that as one of my students, I'd flunk you. But if you're trying to get the benefit, you may want to just consider which way and see what the lender accepts. So I'm taking the approach a lot of people are taking: apply for the largest loan and let the lender tell you otherwise, and see what happens.
Okay, I think you answered the next one about the definition of compensation. Does PPP definition of compensation include your portion of FICA
Yes.
slash medical? Yeah.
So Scuck, yeah, the PPP definition of compensation does include the ER portion of FICA Med because that's in the payroll. So if you can make 100 grand gross, you already paid your portion, the employee portion. No, I'm sorry, I'm messing this question. Let me say the question again. Does the PPP definition of compensation include the ER, not the EE portion? No, it only includes state and local unemployment taxes. Okay, it does not include the employer portion. So let's look at it this way. I got an employee making 90 grand. I paid 7.65% of that employee as the employer. No, that's not payroll. And no, that's not part of payroll costs. It says specifically, FICA taxes paid are not included.
Okay. From Jerry, can payments to independent contractors be included in payroll costs for PPP purposes? I think we answered that one earlier.
No, we didn't. I don't think we
Oh,
did.
okay.
I think, Jerry, the answer to that is no. I've had several people ask that. By the way, this is fun, guys. I'm sitting here talking to you, and guess what's pulling up in my driveway? An Amazon truck. Cool. I'm making more money. So, so the question he's got is, can payments for independent contractors be included in payroll costs? And I think the answer, Jerry, is no. I do not know that as a fact, but I think the answer is no, meaning that that the ICs can file their own. So you're going to have to pay attention to that.
Val is asking for the chart when we get it. Absolutely, we can get that to you. Sam, Q1 estimated income tax payments are not due until July 15th, but our Q2 estimates still due on June 15th.
Wow, Sam. Good question. I think probably, since I didn't see anything on that, I have not seen anything yet, so I'm going to presume yes until I hear otherwise.
From Mark, if a client has 2 or more Schedule Cs, do they file for the grant for all of them?
I would say yes. You aggregate them together. There's a consolidation. So there is a rule that you have to put the businesses together. So I would probably do the Schedule Cs together. You'd have to file the Schedule C based on your self-employment income and use your tax return to prove it.
And then you can see that Rick is sharing from the SBA fact sheet for lenders some information about how agents are compensated. And you can see that on the chat.
Yes, thanks, Rick. That was the piece on there. Thanks for grabbing that for us.
Can you get both a PPP loan and an SBA loan? That one has come up a few times.
PPP loan is a 7A, Novella, and an SBA loan could be a 7B. So you could get a 7A and a B, but you can't do the EIDL and the forgiveness on the PPP both. Hey, got a letter from Chris Iannuzzi. Hi, Chris. Good CPA, good old friend. Well, I'll read his because this is Chris. He's an old friend of mine. So regarding the PPP, are union benefits paid directly to the union, including the payroll costs for purposes of the loan proceed calculation? And I think the answer to that, Chris, I've been playing with that. I'm assuming you're talking about the health benefits you pay, like to Teamsters, and the health benefits paid to carpenters and all that kind of stuff. I think the answer to that is yes, but that I'm not positive, but I think the answer is yes, and I would run that by the lender. For PPP, what's the definition of full-time equivalent for purposes of loan forgiveness? And do I know how they're going to be defining a seasonal employer? I think a seasonal employer, Chris, is going to be defined on a pro rata basis. You annualize them, And they said the SBA administrator is going to make the determination, but I think if I was applying, I would annualize it. We're taking the approach with our clients of go for it, as opposed to not go for it. And I don't know what the definition of full-time equivalent is for purpose of loan forgiveness, but I would imagine logically, which is really a bad presumption that the government's going to be logical. I would imagine the way you would do it is you take the total payroll divided by the total number of employees on the average, and that would probably be the starting point.
Karen is asking if you have to pay employees even if they don't work, or just pay at the level people work.
Well, it's the amount of pay you make. It's not whether they work or not. No one cares whether they're working. They care whether you're paying to them. Because remember what they did with this. They did this to get around the unemployment system. So if we don't pay, let's say they didn't do this, and we laid off all our employees, and now everybody's unemployed, the federal government's going to have to pay for it anyway, or somebody's going to have to pay for it anyway. So the idea was to keep this going. So the way I'm reading it, and I've had arguments with folks on this, like, what if I don't want to bring them back? I said, it doesn't matter if you bring them back. You only get the loan forgiven if you pay payroll. So they don't have to actually work. You can pay them payroll, but that's the question.
Okay, so Lisa, ADP has created a report that excludes all paid time off and benefits for employees earning greater than 100,000. Is this your understanding? I thought only salary amounts greater than 100,000 should be excluded.
Yeah, I think the report is incorrect. It's salary over 100,000. We went through that one a little bit. Michelle brought it up too. The rule was looking like it was you had to exclude employees over 100,000. When I first started looking at this a week ago, it looked like that was the rule. So what ADP may have done is use the old rule, and I would say you want to look at it from salary amounts greater than $100,000. And if you look at the U.S. Chamber of Commerce and you look at the Treasury, I mean, the Treasury gave the guidance. I'm giving you the Treasury guidance. This isn't Leon's opinion. It's Treasury guidance.
Okay, from Missy, is the Michigan Small Business Relief Program the same as a PPP loan?
Missy, I don't think it is. I'm working on a chart right now of all the different things that are out there. I don't have it done yet, but I have a different column for that. So I'm presuming it's not. It is not the same thing.
Okay, from
PPP is an SBA, national level, through the lenders, special program, unlike everything else.
From Triple M, if a manager is also a partner and he is furloughed, can we wait to hire before 6/30?
Well, you could. If a manager is a partner and we can't use self-employment income, it seems to me, if I'm hearing the question right, I might want to hire him back before 6/30 so I could get some of the loan forgiven, but maybe not.
For Michelle, do you use calendar year 2019 compensation, health insurance, retirement for determining the PPP loan amount, or trailing 12 months? 429.
Michelle, yeah, I think I answered this one. As I read the act, Michelle, and everybody, I think it's through February. So it's the 12 preceding months through February.
Jeff, back to the retirement benefit calculation. If the employer makes a profit sharing contribution, should we compute PPP loan calculation? It is based on the 100,000 cap salary. The Treasury defined payroll costs as including retirement at the 100,000, thinking in terms of highly compensated employee.
Hang on one sec. I'm trying to find Jeff. Give me the time on that one, Jody, so I can find it.
12:53.
Okay, good. I bumped my, okay. So Jeff's question, the retirement benefit calculation. Employer makes a profit sharing contribution. Should we compute the PPP loan calculation based on the 100,000 cap salary? Oh, Jeff, you clever demon, you. Yeah, I think you probably should. However, I'm going to submit mine as the actual numbers paid because it doesn't say in the act, and it doesn't say in the Treasury guidance on retirement benefits computed up to the $100,000 cap. It says retirement benefits. It's a separate line item. So, payroll costs is including retirement at 100,000, highly compensated. I get right where Jeff's at. It's me. So let's say I make 200 grand. We did a safe harbor for me, 3%, and my salary's capped at 100 grand. But does my retirement benefit go in at 6,000 or 3,000? The statute seems to say, Jeff, you put in the 6,000 because it says retirement benefits. It doesn't say retirement benefits computed on 100 grand. It doesn't similarly change for health insurance. It doesn't say prorate the health insurance. So I'll go with what the act says. If I'm going to give a strict interpretation of the act, the only limitation on the 100 grand is in the payroll line from what Treasury's saying. But I'll let you guys run your risk on that. We've got basically 3 months to file for these things. And I'm sure a lot of them are going to be right or wrong. We're probably going to get different answers from different lenders. So I'm erring on the side of higher than lower, given that I'd like my clients to get 0.5% forgivable loans. That's just me. And that you all make your own judgment on how you do that.
Okay. Client is self-employed with a loss last year and no employees. Can they file for the PPP for rent?
Interesting question, Mark. I'm not sure. Probably. I would think they could. They're still self-employed. They can collect, by the way, unemployment, as I indicated earlier. I think they could. They might get the PPP for rent. It would give them a loan at least. But that's interesting. It's such a small amount. I'm not sure it's going to be a big deal, but you might be able to do it.
From James, can you get a PPP loan and also a non-SBA loan, or is there prohibition on
Other
other
lending, yeah.
lending?
So James is referring to the old rules on 7Bs, which did have a prohibition on other lending, because you couldn't use an SBA loan on top of other stuff. That restriction is not in this PPP. You can have other loans. You don't even count them. I mean, it's that wild. We're even seeing that you don't even, if you look at the app is available on the SBA website. It's basically a 2-page app. It's a 4-page app, of which 2 pages is the Paperwork Reduction Act. And so, I mean, so 2 pages of it. There's actually only like 8 questions you answer. And you just prove you have payroll. That's all you have to prove. You don't have to prove anything.
Jonathan has his hand up. I'm going to unmute Jonathan so he can ask his question. Jonathan, go ahead.
That was actually, Jody, probably just an accident because the
Oh.
I appreciate it though. Thank you.
Hey, no problem.
Overachiever, Jonathan. Overachiever.
He's playing around with the settings. Okay, we're going to go to C. Fleming. I've heard that wages paid to related parties, example S Corp shareholders, who are not eligible for the employee retention credit, or are not eligible for the employee retention credit. I couldn't find this in the law. Is this correct?
I can't find it in the law. I have heard different versions on that, and I think somebody is interpreting something from old rules. I have, let's put it this way. Let's suppose I was a sole proprietor. Obviously, I can get a PPP. We know that. That's in the statute. Let's suppose I'm a subchapter S employee and I'm getting a wage. That's wages, and it's in my 941. I'm filing it in my tax return. So it seems to me that subchapter S shareholders that get a wage can clearly qualify for the PPP. That's how I'm reading it. My issue that I'm having is what happens with the partnerships, because I'm not getting that answer. So I have not seen any exclusions for shareholders, and I can't believe it's in the congressional intent. They didn't throw $349 billion to make it restrictive. And this is what I directly heard from Gonzalez, Congressman Gonzalez. He goes, we did not intend this to be a revenue producer, and we did not intend this to be any kind of program other than a benefit program to help small businesses. That's all they're trying to do.
Okay. Igor says, can we include any state payroll taxes?
Well, Igor, if you think about it, state payroll taxes are coming out of gross payroll, so they're indirectly included anyway. If I make 100 grand and I pay 4.25 to Michigan, then it's already in my 100 grand's in there. It's in the 100 grand. So we aren't paying the state payroll taxes. We're paying them as a fiduciary. So. Jamie said, I hear you can get the EIDL and refinance it with a PPP. Jamie, I think you can do that. That's possible.
Teresa also with an FYI there.
Yeah. And George is pointing out that some people says you're not precluded from taking the PPP if you get an EIDL, but being able to offset the $10,000 grant. And that's George. That's what somebody else said too. I think those are similar statements, and those are out there.
Maria, payroll costs and retirement plan question. So no limit for defined benefit portion, which can be large.
Yes.
Okay.
I had a private one. Have I heard there's a cutoff date for filing 2019 for stimulus payment before they default to using 2018? I have not, Michelle. That was similar to one of our previous questions. I'm trying to get the guidance on that from IRS, but they haven't given it to us yet. They're going to have to do something and tell us what they're going to do. So I don't know.
Art started a question. Can a religious organization qualify for, I'm not sure which one he was wondering though.
A religious organization that's a 501c3, in my opinion, would qualify for the PPP.
Jonathan asks, do you make one application and aggregate the businesses for multiple entities, or do they aggregate them in the addendum?
I think you aggregate them in the addendum. I believe that's how you do it. Teresa, by the way, posted something good here, and it's also a link. The $10,000 EIDL grant is not required to be paid back, and covered individuals can still apply for an SBA 7A, which is the PPP. Any loan forgiveness granted under CARES will exclude the $10,000 advance because it's a grant, not required to be paid. So she's saying, for my researching and participating in CARES forums, it's to provide small businesses with an emerging cash infusion. You're right. She kindly gives us a great thing to the SBA, and there's a lot of good information on there. So thanks.
Okay, we are getting to the end of our time here. We've got about 5 minutes left, and I just do want to remind everybody that this presentation is being recorded, so it will be posted on the MICPA website in the future. We'll put a word out when that is available. So all of these great links and resources that people are sharing, you'll be able to go back and actually find them on the chat as this is being recorded.
Great. And
We'll try to get this out.
Stuart said thanks, and he was surprised I'm in a sport coat, not pajamas. Stuart, you don't know what the other half is. I was going to wear a Hawaiian shirt and flip flops today, but so yeah, it's really fun. Hey, Jody, I'm just going to close up with a couple of comments. This is quite an important time in our lives as CPAs, guys and gals, and we are really the people who our clients rely on most. We're the trusted advisors. So, I know this is complicated, and I wish I had a dollar for every time I said I don't know or I'm not sure, but it's really, it's really important that we get ourselves built up and get into this and do the best for our clients. So please put your own oxygen mask on first. Please, take care of yourselves and take care of your employees. But as we're looking forward to our clients, let's all work together. We're not competing with each other as CPAs right now. We're competing against this one thing. We got one enemy. So I'm going to leave you with one thought, and that was just something my 96-year-old mom used to always tell me. She'd been through she was born in 1921, went through the Depression, had my sister 2 months before Pearl Harbor, and went through basically everything. Lost her husband of 50 years, and so on and so forth. And she would always, and lost 8 kids. She had 9 kids. She had 9 kids. She lost 7 kids in birth and childbirth because she had a rare heart thing. She said, "Honey, just remember this: tough times always end. Tough people don't." So I'll leave you all with all that. Hey, stay safe. We're all in this together, and God bless y'all.
Thank you so much for your time today, Leon, and everyone. I do want to remind you that we have our third roundtable discussion tomorrow from noon until 1:30, and that's going to be a small practitioners panel. Actually, Jamie LaPiccolo, who has been on this call, will be part of it. And that one will probably be a bit smaller, and we'll have it a little bit more informal so we can just discuss as a group how everybody is getting through this, and maybe share some best practices on what you are doing as a small practitioner in these strange and interesting times. So thank you all so much for being a part of this. We hope you found it informational, informative, helpful. We are here as your resource. As always, we're either a click or a phone call away. Don't hesitate to contact MICPA if you need anything. Thanks so much, everyone.
Thanks, everybody.